It is Greg here with Market Update. Okay, so let's start with market pricing for the Fed, because what's happening there is actually quite important. So today is April the 29th, 2025. In exactly 1 year from today, so April the 29th, 2026, there is a Fed meeting on that day. And market expectations for the Fed funds rate at that meeting in 2026 is for the Fed funds rate to be as low as 3%. So in exactly 1 year from today, what the market is doing is that they're basically pricing that the Fed will be cutting 125 basis points because the Fed's funds rate at the moment is still at 4.25. So that's 5 interest rate cuts of 25% over the course of the next year. Now, why is the market doing this? It is doing this for one simple reason, is that the market is expecting a lot of softer, poorer economic data to come out of the US, as you know, in the next couple of months. And obviously then they expect that the Fed will have to come to the party and start cutting rates. Okay, so I mean that's going to have implications obviously for the market, for the US dollar. Certainly what the market is doing with the rate expectations for the Fed is certainly going to weigh on the US dollar. So the US dollar over time, certainly do expect that to be trading much lower. At the moment, we've talked about how the dollar index has been struggling around that 100 mark, which has been a technical and also a psychological level of support. So we haven't seen a decisive break there yet, but I would say with a bit of confidence that over time, if we're looking at the dollar index in the next month or two, and further out, we probably will be trading well below 100. So the US dollar, I'd suggest, is a sell on rallies. Okay, so today, just on the same theme, it is a big data day in the US, in that we get Q1 GDP. Now, market is expecting Q1 GDP to come marginally positive, so just marginally above zero, so around about 0.4%. So that is a big hit from last quarter, like Q4 of last year, which was at 2.3%. So 2.3% going all the way down to 0.4, shows exactly what the market is concerned about. And then obviously the market is also concerned about the US economy potentially going into recession. There are some analysts that are actually thinking that this GDP number could actually be negative. So if that was the case, I would imagine that we'll see some big market moves on the back of that. A lot of US dollar selling, US bond yields probably will drop sharply, and obviously that is going to be very positive to gold. On the flip side, the bar has been set very low for this GDP number tonight in the US. So if it did manage to beat expectations, which I assign a lower probability to that outcome, but if it did, then obviously a lot of those concerns about an imminent recession would be put aside, and you'd probably see a rally in the US dollar and the opposite, gold falling. So let's see how that number comes out tonight, but it is super important, and we're 100% going to see some volatility. So make sure you keep an eye out for that. Moving along, another thing that's worth mentioning at the moment is that we're moving into a critical phase with the war in Ukraine, with the negotiations for peace between Russia and Ukraine. Trump and the US have been super frustrated with the progress here. Trump obviously had wanted this the war in Ukraine to be settled a lot earlier. So anyway, he has given them final orders to map out a peace plan, and on the back of that, if there is no peace plan basically agreed upon, the US has basically said that they would walk away as negotiators. And obviously if they did this, there's going to be some ramifications. They would punish Russia, by increasing sanctions on Russia, specifically on their basically crude sales. So if there was no peace agreement, expect a spike in crude, just when we've got crude back down to $60. So obviously that wouldn't be a positive. And then also for Ukraine, they basically said that they would end all sort of military ties and not support them militarily anymore. So obviously, if they can't come to an agreement, the outcome for the market and global is probably not going to be a good one. And if they did come to agreement though, then obviously the market to watch there is gold, which has been a safe haven. We've seen a war premium built into gold, so obviously we could see gold get trade a lot lower. Gold's been super volatile, trading in almost 100 point ranges. So look, either way, with what happens now at this critical juncture with the negotiations for peace, it's certainly going to have some implications for the market and some market moves. Just quickly here in Australia, we do have Q1 CPI out today. It is quarterly CPI, only comes out 4 times a year, so big focus on that. Also big focus, as we've mentioned, is market has been pricing in RBA rate cuts next month starting. So this CPI number needs to behave itself and hopefully come in even below expectations. We wouldn't want to see this number actually come out above expectations and then start to question whether or not the market pricing of the RBA is correct. And then finally, just tonight, after market closes, you got 2 of the tech titans. You got Microsoft and Meta basically releasing their first quarter earnings results. The volatility attached to these earnings results, those stocks basically are expected to move anywhere between 5 and 7%. And being such mega caps in the tech space, that will certainly move equity indexes, NASDAQ and S&P. So a big day coming up, but even after market closes at the end of the session, there is definitely going to be still some volatility. Good luck, and we'll check back in with you shortly.